morning, everybody. If you give me a quick sound check, please, that'd be great. Excellent. Morning, guys. Morning, Scotty. Morning, Matthew. And morning, Ian. Good to see you. So, big day today, guys. Yeah, big day. UK budget. It's going to be, I don't think, in terms of actual trading impact, I don't think there's going to be too much initial impact. But if you've been catching up in the general chat, my understanding of these budgets that take place each year is the impact ends up bleeding into the markets over time. So it's almost like ripping the band-aid off now, and then we sort of see the impact of that drizzle out into the markets over the course of the next, over the next year. We will see the impact of that. It's a pretty big one this time around. I'm sure some of, if not all of you, have been kind of keeping your ear to the ground about the budget and what it is actually going to mean for the people. It's a pretty sorry state of affairs, but I was deciding whether or not this morning to come on here and wade on it, and be probably, a bit of a doomer, I suppose, or just to tell you exactly what you need to watch out for. And so that's what I'm going to do. I'm going to do the latter. It's a difficult one. Don't really agree with the budget whatsoever. But that's what these ridiculous people seem to be considering. So that's what it is. Anyway, moving on. The main points then, I've got some stuff written down here. The main points for today's budget that you want to be watching out for. So number one on the list for me is the fiscal policy changes. Now, the Chancellor, otherwise known as Rachel, is expected to announce changes to the fiscal rules. Now, what this will do is allow for increased government spending on infrastructure projects. Now, I think this could, involve technical adjustments to how national debt is measured, so potentially freeing up to 50 bills for investment, which now, as it happens, actually might not even be working out the way we considered initially. So we not even entirely sure on that one now. Number two is thinking about, obviously, the big elephant in the room, the taxation adjustments. Now, whilst the Labour Party has pledged not to increase the headline rates on income tax, national insurance and VAT, there could well be increases in employer contributions to national insurance. Additionally, there could be changes to capital gains tax, possibly aligning it with marginal income tax rates and adjustments to tax-free cash withdrawals on private pensions. So, again, this is purely speculation at this stage, but this, again, will bleed out into, all of us will feel the effects of this, every single one of us, I should imagine. 3 on the list for me is public borrowing and spending. And public borrowing has spiked ahead of the budget. And there are expectations of significant investment in infrastructure, including roads, hospitals, railways as well, I think. There may also be cuts to public service spending as part of efforts to manage the national debt. Next up is pensions and retirement. So the state pension is set to rise, and this is groundbreaking. They're considering a rise in the state pension by £460 following the triple lock mechanism, which you may have heard of. Ian, you may have heard of that in particular. I'm not sure about the other guys. But yeah, £460 from April. Man, awesome. There may also be further measures affecting pensions and retirement savings as well down the line. which we're going to wait to hear about today. We've got the obvious market reaction. So financial markets are going to be closely watching for any signs of increased borrowing or spending that could impact the yields and investor confidence. The potential for tax hikes or spending cuts could also influence market sentiment as well. So we do want to be watching out for, honestly, all of those things. We want to be thinking about bonds, fixed income markets are going to jump, absolutely. And I know not many of you guys in here are trading fixed income at the moment, but it's a big thing to consider. Investor confidence, another thing, obviously. Tax hikes and spending cuts. Also, that's going to go back to market sentiment. So a number of different things that will eventually, maybe not immediately, but will eventually bleed out into the markets that we are active in every day. And then finally, the major thing is going to be obviously the economic context. And the budget comes at a time of significant economic uncertainty. We've got inflationary pressures, geopolitical tensions as well, which are affecting the global economy as a whole. The UK has been one of the worst performing G7 countries to date in terms of its recovery, getting out of the hole. It's in a terrible state. It's actually a story this morning. I obviously won't go into too much detail here on a live presentation, of course, but heartbreaking story about a little boy that goes to my son's school and the difficulties that he's facing and his parents are facing and the struggles that they're having to go through. I won't say any more than that, but take it from me, it's very bad. And this is the story for 5 million households that we know of that are on a statistical report out there in the UK at the moment, who are having no other choice but to seek aid from food shelters and stuff like that. People with children that are going to be in a terrible state of affairs because of the way things are at the moment. It's awful out there, and I think it's very humbling, especially when you're living here, to reflect on the fact that not everybody, and to be honest with you, hardly anybody, really is having a good life at the moment over here in England. There's going to be the minorities, of course, and I'm not singling out any sector here, any band at all. But there are people out there that are going to be cruising on through and be okay. But the general consensus in our country is oppression at the moment. It's really bad. And listening to that story this morning as well from my kid's mother, who filled me in on what was going on with the situation, it was heartbreaking. It was absolutely heartbreaking, and he's only one of a huge number. So, yeah, the UK's economic strategy is going to be really heavily scrutinised for its ability to balance growth and fiscal responsibility. So, get ready for it. I don't think there's many people really out there at the moment that are too happy with the way things are, and that's in the upper and the lower halves of the financial income spectrum. But something's got to change, right? And I don't think this budget is what is really going to be the change that everybody wants. Everybody's been counting down to this event, so it's not like they've been on the edge of their seat, excited, waiting for it. It's almost like everybody's been counting down to be like, after this, where's next? The country's like, I speak to some people, some normal income earners, it's a very normal people, and they feel like the country's just ready to implode. So, yeah, we'll just have to wait and see. Anyway, that's nice and depressing for a Wednesday morning. So we can go forth and we'll have a look at the budget this afternoon and see where we go from there. To be honest, instead of reducing the debt, just change how you measure it. Yeah, exactly. Yeah, Oh, they're masters. They're masters of bullshit, mate. Masters of bullshit. So anyway, looking at the markets then this morning, had a couple of attempts on our trade idea with the UK FTSE. One of them was a loss, one of them was a win, so that was quite nice. And we also had the DAX, which unfortunately I took a loss in as well. The breakout here was pretty crap this morning. Unfortunately, we did have this sort of grinding element here. It just didn't do anything, to be honest with you. It had no reaction to the anchor points whatsoever, and it's just kind of dwindled along sideways. So there's next to no market action at all this morning. The UK FTSE was actually really nice, and if I was very vigilant, I would have been taking the short and the long here as well, because at this stage we're tripling up on that this was a 1 to 3.19. Well, it's exactly the same as the last trade. It was just copy and pasted. So we could have had, we had the 1, we could have had the 2 and the 3, all for 0.8 returns. And it could have been a really, really good morning, but unfortunately I just let it go at the end of the day and had my second attempt, and that was that. Didn't want to give anything back. So that was that. That's where we are with those two. The EU 50 was okay this morning as well. Obviously, I didn't trade this one, and therefore, obviously, didn't send out anything to you guys. But it was okay. It was gradual little move down here, but all right. In terms of where we were from yesterday, UK Brent triggered early this morning. We had our criteria, which was met yesterday. So that was it about middle of the day, 3 o'clock in the afternoon. This is from Monday's trade ideas. So UK Brent came down. We dipped its toes into that 70.90 area down. Sort of down here, 70.85, 70.90, which means then we could place the pending order. Market came up and triggered my particular pending order at about 5:30 this morning, and it's currently sat at break even after having a very, very small little rally into the profit. I still am really confident about this one getting going now that we've dipped our toes into the real area of money. I do think that this does have every possibility of climbing back up to 73.57. And also, it's a really good time to tell you guys, because if you did not put your pending orders in after we had the dip down into the money here, you can enter the trade right now at no extra expense. The trade is at break even, so you can enter the trade now if you wish. And just so everyone's absolutely clear, the TP 73.57, the entry is 71 wherever the hell it is right now, 71.66.65, and the stop loss is 70.938. So next up on the list we had gold. We did not get the short opportunity, but we did get the breakout. So we got the break close retest, and this was just a simple and easy fixed 1 to 2, as we are always doing here. Haven't taken anything further past that point, because that was obviously that completed around 6:45, and it's now trading. It's 27.82. If we go up to the daily time frame here, look at this. The high, all-time high of gold, 27.89.85. Almost at 27.90. Even further, almost to 28. Doing very, very well at the moment. And we'll continue seeking out fixed 1 to 2 trade ideas long, or break a structure for shorts. So, for example, where we're trading at the moment, the most recent and major level of liquidity to consider going short the market is actually a little bit unclear at the moment, to be honest with you, because of this pennant that was formed here. Some may say there, but I would probably be more keen on shorting underneath this area. So that, for me, is I'm going to consider as the next major anchor point to go counter trend from. If you want to go long, fixed 1 to 2 risk reward ratio trade, honestly, from this area in here isn't even a bad shout. So the breaker structure for the long here is going to be at this area in there. And then again, you're looking to do just exactly the same thing as yesterday. Fixed 1 to 2 risk reward ratio, not even thinking about levels of liquidity at this stage, because we're trading at all-time highs. And that's that. But we only ever look for 1 to 2s. Okay, I don't want to, there's no 1 to 2.5s, 1 to 3s or anything like that. It's just a fixed 1 to 2 over and over and over again for the long breakouts. Okay, so Potential trade idea there. We also have the potential for a short from around 27.72 back down here to around 27.59. This could be a pending order. I mean, to be honest with you, the long at this stage can be a pending order as well, on both sides of the market. So there's two pending orders there for gold, so I will leave that as blue label. Moving down then, really big shame about the Aussie CAD. Again, took a hit on this one yesterday. Pending order was triggered at about 12:30 last night, and it just shot down. But in actual fact, we didn't even get to this stage, because when my pending was triggered, the market actually tipped back down in the same damn candlestick. So that is the trade idea. It lasted for about 3 minutes. So that's annoying. And then obviously we came up and hit TP with a really clean setup there. And that was this morning at 8 o'clock. So really, really nice. And we will get down to it, but check out the NZD CAD's move. Because the NZD CAD was an absolute storming asset this morning. From around 5:30 a.m. we broke structure and it just rallied in one direction. Didn't give a crap about any of the levels of liquidity on the way up and is just powered straight through. Really, really nice performance there from the NZD CAD. Didn't catch a single thing of it. Fantastic. So the Aussie CAD at the moment, it was a loss. We now did the trade idea, worked out really well. Just the wrong time, unfortunately. However, this does present another opportunity because of where we're trading. We're currently trading up against a really nice big daily level of liquidity. And we've got a fantastic 15-minute breaker structure point in here. So we could well look at another short, breaker structure in there. Target profit's going to be down at the next major point below. And that's going to be your trade idea. Probably a little bit lower than that, to be fair. Yeah, so like something like that, a 1 to 2.1. So pending order trade idea. I'm not looking at taking a long in the Aussie CAD from this area until we clear out maybe 91.71, for example. So it's got a long way to go before I start to see any real buying interest coming back into the market. And it can bounce all the way up there for all I care. It doesn't make a difference. But this pending order short looks quite good. Looks like a well-rounded trade. So that's the one I'm going to roll with. So let's just label that off red. Aussie yen. Unfortunately, guys, nothing in this one at the moment for me. Way too much of a quiet and ranging state structure to really get stuck in. I mean, this is through peak trading hours yesterday. Peak trading hours. We didn't see anything, so yeah, not too excited about that. Aussie NZD, very much the same thing as the Aussie yen. It is trending to the downside, definitely, but I don't want to be stuck in any of this stuff. It looks really boring at the moment, and looking back in time, it looks like we're coming back up for a retest of liquidity here, which is great. And we've got this one down here, which is not bad as well. But the trading margins, I don't believe, are actually that good. So if we have that as the TP zone, this one essentially as the entry zone, this then becomes our trading margin. And that, for me, on a 15-minute chart is just too tight. Because if you think about the entry, we can't just simply enter here because there's no criteria. So we need to wait for the breaker structure of that to then enter. And once you're in there, I mean, that's you're really playing with fire there. So I think it's better to wait for the Aussie NZD to clear out one of these major areas and then consider the move. Aussie dollar at this moment in time, yeah, I mean it's a trending market, isn't it? Really, really nice trend to the downside. So I think at this stage, look at the daily chart, see if there's any major points of liquidity in the daily that we need to be aware of. Well, we've got the price line trading currently at a relatively large level of liquidity. So if we just whack that one in there, possibly a little bit more height. So that's where we are at the moment. Right, all agree. I think that's a pretty decent place for it. So what this looks like is a break close and a retest of this point of liquidity, which is really good for us because this is on the daily time frame as well. And then of course we have the next major point below. I'm not going to be going down to the double bottom here. Okay, so that's not what I'm really looking for in the short term. But the midterm, we could certainly be looking at around this area, this floor, or at least the little intraday breaker structure that we had directly above it. So that is a potential TP. So now if we go back down to the 15-minute time frame, we do actually have a relatively decent trading margin for this Aussie dollar. and it's with the trend. So again, looking at the breaker structure point for this one, it's a little bit difficult at the minute. We've got the midpoint sort of TRF. I would say utilizing this low and these highs, that there is probably going to be the most significant area to look at an entry point from. Actually, just looking at this as well, because that's quite a nice tripwire there. Got the bounce, got another bounce, break, close, retest, we come down, we rebound, we break and close above. So I think we'll clear this one out as well, just for good measure. So price action breaks structure on this area of liquidity, also breaks the structural point of this ascending level, and then we can get in with that little bit of additional confluence. Target profit's going to be down at 65,208. The stop loss is going to be at around 65.79, and we're looking at approximately a 1-to-2 risk reward ratio, just like that. So that can be set up as a pending order as well, team. You can implement that whenever you like. We have now got 2 shorts in the Australian dollar, so we do need to just remember that as we move, as we work our way forwards. Okay, CAD Swiss. Trading down at big liquidity. It's had a couple of really nice bounces in recent history. Going even further back, it has been the point of interest for some really significant rallies on the daily time frame. We are still trading well under the descending level. Okay, so that's just it as a broad spectrum, but if we drag that down, there's one there as well. So let's just have that as a general consensus as to where the price may end up going and then reversing. So looking at this at the moment, this then becomes our trading margin in the short term, in between the zone here and the descending level there. So now we've got a space to work with, and the margin is wide enough for us to enjoy. So we've built sort of 2/3 of this trade idea very, very quickly. Now all we're doing is looking for that breaker structure point of entry. The breaker structure point of entry is probably going to be at the roof or the most recent ceiling of price action. Now the most recent ceiling is undoubtedly here, right? That's the most recent ceiling we've got, right? Which means then this becomes a no man's land, and this becomes the true trading margin, which still presents a really nice margin to trade. So then we can look at a pending order above here. We can look at the target profit just underneath the descending level. We don't want to go directly to it, even though that's where I imagine price will end up going. We want to have it a little bit under just to account for that margin for error. And then we have our stop loss, which is going to be down below the point of liquidity to account for any potential wick throughs at 62.33. And we've generated a really well-rounded 1 to 2.7 trade idea. So that's going to be my trade on the CAD Swiss. Really nice, well-rounded, good risk-reward ratio, no major fundamental catalysts. It's a good one. Yeah, I like that. So, and we've got this level in here, don't we, as well? And that's essentially the floor at the moment that we're working with. If we end up going short on the CAD Swiss, it won't be until at least 62.15, so we've got nothing to worry about there. So CAD Swiss long. Moving on, CAD Yen. So I do want to include that one as well. So we've got the 1, 2, 3 above. This is almost like the polar opposite of the CAD Swiss, because now we're looking at an ascending level and not a descending level up to a level of liquidity. So that goes right up there. Yeah, it's a pretty good level, to be honest, that one. Okay, so CAD Swiss. I don't really want to be, as it happens, I'm looking at double exposure in the CAD now. Double exposure in the Australian dollar short, double exposure in the CAD long. But this is, nevertheless, a pretty clear trade idea. Not ultra clear, but pretty clear, because I'm thinking maybe a long up to there, 110.60 from a breaker structure here. Just to be absolutely sure, let's put it there. Just going to do some testing here. So, interesting point here, right? If in doubt, look left. If you are in doubt about your zone's capacity, just look left and drag it along to see what reactions you can see from it. You're seeing a lot of rebounding, retesting, and general manipulation happening around these areas. Then you know the institutions are using that level as well. The institutions at the end of the day are the only people able to move the market and change the market and reallocate their assets to move the market around these areas. So this isn't retail trading stuff. The retail trader will most likely be focusing on the 1, 2, and 3 because that's where the market's reversed. The retail trader generally won't have the capacity at looking at areas like this and the intricacies of price to notice the differences here. So I would say that this probably is a good zone to utilize. The reason my hesitation came about is because of the highs up there, and that doesn't make too much sense because as I drag it through here, we have this multiple attempts at this area, but that doesn't necessarily lead to anywhere. The lows are down here where my zone is. So now we're talking about a game of probabilities. What is the likelihood of one zone working over another? Well, if we do basic mathematics to work this out, we can see that there are a lot more attempts at this area than there are of the one above it. And so therefore this is going to be the zone that we utilize. So in this area, I'm going to be looking at a break of structure, entry, pending order, target profit at 110.60. Stop loss is going to be at about 110.25, maybe 110.27. Actually, 110.26 as it happens. 110.26 is the stop loss and the entry at 110.35. And that's yielding a 1 to 2.67. That's ridiculous. Yeah, I could have sworn it was a 1 to 2.67 on the CAD Swiss as well. Completely unintentional, I promise. I don't even know how I've done that, but these are like the polar opposite trade ideas, both yielding a 1 to 2.67. It kind of gives me a bit cold feet, to be honest, but I'm going to try and not be too superstitious and just go with it. So there is the difference between the CAD yen and the CAD Swiss, though, is that there is probably another opportunity on the other side of the market here, just glancing at this. So we've got a nice point of liquidity running through the base of the markets here at the moment. We've got a fake out area of structure here, double bottom fake out. But we also have this point here, which is where it's bounced off the ascending level, but also it's bounced off this point of liquidity. So what I'm thinking here immediately is if we get a breakout of this ascending level and the zone, could we then be looking at a clear path of least resistance down to the floor of the market, which was 1, 2, 3, and 4, before we gapped up and started the surge to 110.60. So then if we look at this margin in here at the moment, that's actually a really nice trading margin. We have got a TRF. The TRF is situated around 109, beg your pardon, 69, which is, fine. That's right bang in the middle. But if we look at the break of structure, I think this could just be the break of structure. So let's say, for example, if price breaks down below this area here, we then are looking at a pending order entry, short target at 109.50. 109.50 target, entry at 109.79, entry, and the stop loss. I mean, should we put it at 1 to 2.67 again? No, I'm not going to do that on purpose. Something's happening. I don't know what it is. So that there is the point of liquidity that we want. So I mean, that's pretty much it. Okay, this is just getting silly now. But yeah, I mean, that is the trade. That, without shadow of a doubt, that is the trade. So yeah, we'll just have to go with a 1 to 2.68 there as well, I suppose. There you go. So that's the CAD yen. So the CAD yen is actually going to be labeled as a split bias. So that's going to be blue. All right, Euro was another really depressing outcome here because our pending order was triggered and went to failure, triggered and went to failure, although I wasn't in this one, and then rallied straight the way up overnight. Came straight overnight, hit TP, straight down, another beautiful short all the way back down to 64.70. Really savage, to be honest, as these trade ideas are all playing out, and the bias was right, but it was really bad timing. We did have a split decision on this Euro was, as we had the potential short there as well, but that was nowhere near to triggering. So looking at this Euro was at the moment, guys, I mean, I think I'm probably just going to take a bit of a step back from it, because the same trade setup still applies. It shouldn't change. There is no difference in today's market than there was yesterday. So we should still be looking at this breaker structure for the long up to 165.20. But I'm going to take a step away from it. So actually what I'm going to do here is I'm going to take my foot right off the gas with the Euro was. And I'm potentially going to leave this short in, even though this seems like it's ridiculously far away now. I'm just going to leave that in the market there for the time being and not look at trading the Euro was long. So Euro Yen, no. Euro NZD, no. Euro Dollar. Could we take that back up to there? What are we against the dollar at the moment? Okay, so we're bullish dollar here, and we're bullish dollar here, and we're going to be bullish dollar, and we're going to be bearish dollar here. So this could act as a potential cross asset hedge against the others that we've got in. That kind of makes sense. It would be nice to have a little bit of protection from the others. Today, however, is not the day I thought it was. That's coming up. Yeah, no, that's not the day I thought it was. Wait, yes it is. What day is it today? It's Wednesday today, isn't it? No, it's tomorrow. No, I was right. Yeah, I'm right. That's fine. So we still have that time. I don't know. I'm not sure. What I'm considering at the moment, guys, is a long from here back up to the previous high. Right, so this would be the new trading margin. Let's have a look at this. So that in there. So then that would be the margin I'm looking to trade. I don't know. This doesn't look very good right now, does it? No. I'm gonna no. Not gonna do that Euro USD. Okay, so GA, really nice short. Obviously, Australian dollar doing well. Pound in a complete state of disarray, and it will be. I wouldn't be necessarily trading the pound pairs today, guys. You know, market impact initially might not be anything at all, and that's absolutely fine. But it's a big thing. It's a really big thing. So it's in terms of trading the pound primes, I'm going to completely remove them from the fund. They're going to have no exposure whatsoever. Okay, so skip all the pound pairs. So NZD CAD, a lot of these assets, I mean, they've had incredible rallies at the moment. You know, NZD Swiss, for example, NZD Yen's not even been that bad, but this is a range trade. A lot of these at the moment I'm going to be looking for correctives. I'm not going to be looking at taking them long anymore because of the growth that we've seen today. So I will be looking for areas of liquidity, generally speaking, above price action that it's traded to. Unfortunately, with the NZD CAD, it's not actually traded to anywhere major. It's right bang in the middle of something. And at the moment, if we utilize that as our level of liquidity, this looks like a retest. So I can't be trading it anywhere near shorts at the moment. And I don't really want to be trading it long either because of the rally that we've had. This is, imagine if we, you know, sort of inverse the charts here, right? So let's pretend the NZD CAD is a short. If I'm looking at this and trading that shorter, what would we all say about it? What's the first thing that comes to mind if we're looking to short the NZD CAD after a move like this? Famous saying, guys, famous saying. Wakey. I want to quickly run back to your screens. No idea? Thank you, Scotty. Yes. catching a falling knife. We've had a big run to the downside today. Yes, we are getting a break close and retest of liquidity, but do we want to start then taking another big short with the anticipation that the NZD CAD of all instruments, with no major fundamental catalyst taking place, is going to fall 1% down? I just don't see it. I really don't. So I'm probably not necessarily going to be looking at that. A break of structure point for potential shorts, however, would be here. So that's going to be below this low. And then I would be looking to take that short back down, potentially. Actually, wait, let me revise this zone because that's pretty fat. So that is the break of structure point for a short. And this as a point for the TP. So does that margin work for us? No, I'm not going to risk it. I'm not going to risk it. I'm not going to do it. So no, I'm not going to do anything with the NZD CAD. Except the fact that we've missed out the opportunity. It started at around 6 o'clock this morning, and be done with it. NZD Swiss, very different kettle of fish. NZD Swiss at the moment has traded up to a really nice point of liquidity and is now finding a resistance area at that point of liquidity. So this is the kind of setup that I do like. So we've got a nice floor to work with here as well. We have a very clear trading margin. We have a very strong TRF, which is something that we need to consider. But ultimately, the break of structure point for this is going to be about there. Right? So that's the break of structure point. And so we're going to be looking at a pending order short. And we're going to be looking to trade the damn thing right the way down to where it began. So target profit, stop loss 1 to 2.7. NZD-JPY. Now, I actually really like the NZD-JPY because I love ranging in volatile market state structures, which is what this is. Nice ranging volatile market state structure. The only problem with this NZD-JPY at the moment is that the moves already began. That's the disappointing element. What we could think or say here is that this area in here is a potential for a good break of structure point because of the peak at this point before it rallies down or runs down even. So then we could look at a potential for the short, target profit, and stop loss where it is, 1 to 2.57. So that's a nice potential short there as well. Okay, so you can quickly plug that in because this one looks like it's going to trigger quick. Okay, so we're getting some pretty decent market exposure now. The fund is, and hopefully all of your individual packets there are looking pretty full. We've got a lot of possibility. Commodities done, a lot of the FX spaces. We've got split decision trade ideas in the CAD yen and gold. We've got Aussie CAD, Aussie dollar, Euro Oz. CAD Swiss, CAD Yen, NZD Swiss, NZD Yen. There's a lot going on here. I don't like that anyway. USD China's always pretty good, but to be fair, not at the moment. USD Yen. So we're reaching a floor. Not a massive margin down to the next point of interest. Potential bounce back to 153.82. Now we're short the NZD against the yen here. We could long the USD against the yen as a hedge to protect us from the risk there as well. So we're constantly looking at generating that income. Does that look like it's worth it? I think it does actually. Yeah, that doesn't look too bad. So let's utilize this here as the floor. We're going to consider this one to be a fake out. The break of structure for this asset is going to be in there. So then our trading margin becomes this space. So then if we have a long, that's triggered there with a TP here and a stop loss in there, that's going to be a 1 to 2. So I'm going to go with that. That's a pending order. USD yen long, 153.25 entry, 153 stop loss, and a 153.72 target profit for a 1 to 2 risk reward ratio. Oh, thank you. So that's going to be that. And this is then again hedging off some of the risk that we've taken on board with the NZD JPY. Okay. Now for the US stocks this afternoon, I'm not going to bother talking about them now. You will receive at approximately 1 p.m. or so, somewhere around that time, full analytical breakdowns as you did yesterday for our US stock markets. So please be aware of that. Stay tuned. Yesterday afternoon, I was quite active in the markets yesterday afternoon and trading them and calling things out. So just be aware of that it will be going on. And until that time, I wish you all the best of luck. I hope you have a great day today. Remember that the UK budget is a extraordinarily important economic indicator, as in a sense, and it will be taking place this afternoon. So do be aware of that and expect market volatility. Even if there is no impact, it's best to expect it. And and good luck. So if there's no questions, guys, if there are any questions, no, all good. Yeah, no worries. Well, I wish you all the best, guys. Have a fantastic day today. It's been a pleasure as always, and I look forward to catching up with you soon. Take care, good luck, trade safe, and I'll see you then. Thanks, guys.